Welcome to our Digital Assets webinar. The first part of this webinar has been pre-recorded and will be followed by a live Q&A session. You will be able to ask your questions throughout the session using the Q&A box on your screen. So in this session, we will be exploring the world of digital assets, where the market trends are taking us, the likely impact on financial institutions, and of course, how BNP Paribas Securities Services is preparing the adoption of digital assets for the industry. And to do this, I would like to introduce our 5 panelists. So Eleonore de Savagnac is a Digital Partners Executive at BNP Paribas Securities Services. She's responsible for designing the external technology roadmap, coordination of key projects on digital asset custody, as well as supporting our fintech initiatives and partnerships. Julien Clos is the head of the 021 Exploration Engineering Unit at BNP Paribas CIB, a structure aiming at managing strategy-driven digital solutions with the ambitious goal of making CIB future-ready. Julien has over 20 years' experience in building ventures in various industries. Emmanuel Pesonisic is a digital transformation manager at BNP Paribas Asset Management. In collaboration with the Chief Digital Officer, she's responsible for revamping the asset manager digital strategy and looking at new business models in Europe and in Asia. Vladislav Unrug is a strategic analyst for public affairs at BNP Paribas Securities Services. He's responsible for monitoring and assessing the impacts of regulatory evolutions of digital technology. And finally, our special external guest is Itai Mallinger, co-founder and CEO of Curve, a market-leading fintech that is setting a new standard for digital asset security. And my name is Stefan Lubenek. I'm the head of client engagement for technology at BNP Paribas Securities Services, and I will be moderating this panel. So I think we can move on to our topic and the questions. So the first question for our panelists, considering that capital markets have been essentially digitized, what is the real value of digital assets? And maybe, Julian, we can start with you.
Sure. Maybe it's worth quickly presenting blockchain and tokenization to the audience. All may not have the same level of understanding. So blockchain is a distributed ledger technology which records transactions in a tamper-proof way. Fundamentally, you rely on cryptography to trust a record. The key question is, what does it bring that we didn't have before? And the answer is digital unicity. In the physical world, it's quite obvious. If I give my phone to, let's say, Emmanuel, she sees I have the phone and I really move the phone from my hand to hers. It's not possible in the digital world. It wasn't possible because you can easily copy or duplicate. And thanks to blockchain, you can now do such things. I cannot make a transaction if I don't really have what I say I have. And the blockchain guarantees there is no double spending. So as it's digital, it opens up a whole new world of possibilities. Of course, it's almost instantaneous, could be peer-to-peer. The assets can be programmed, as we'll see, and I can leverage direct digital distribution channels such as mobile. So in this context, tokens can be seen as wrappers encapsulating either information or value. So this information or value can therefore be transferred securely and almost instantly in the digital world. So if we consider value only, these tokens can be of 3 different natures. They can represent a currency. Let's say 1 token equals 1 euro, and that's the case of central bank digital currencies we're hearing a lot these days from the likes of the ECB, for instance. But the token can also represent some utility. For example, 1 token gives me back 1 kilowatt of hour of energy in 1 token. And finally, I can represent security in such a token, such as equity or debt. Now, okay, what's the value for capital markets? Eventually, it's back to a possible technology disruption in terms of managing value and information. Here, we rely on a technology layer to manage this value, the same way the internet underlies the information management. And this technology is very cost efficient. What was bulky and expensive previously can be done quickly and cheap. Of course, blockchain does not solve ecosystem complexity. It's very clear. The fact one organization or industry is not optimized will not be solved by technology. Still, when considering the cost factor, the distribution capabilities, and the ability to deal with smaller amount of value at limited cost, it starts to be interesting, leading to what we call a long tail effect. We see opportunities to manage new product classes in ways that were not possible before. And it also solves asymmetry of information, where investment details are sometimes hardly accessible. But for these aspects, I can let Emmanuel and Eleanor share more about it.
Thank you, Julien. So from an asset manager perspective, we are seeing the impact in twofold. First, from the fund structuration perspective, and second, from the investment perspective. From the fund perspective, we are also calling that the tokenization of mutual funds. We're seeing a lot of opportunities because of different aspects. First, there is a cost reduction aspect. And what is really attractive is that it can be passed on to clients in order to potentially reduce the fees. And this is what we have seen from some of the proof of concept from asset manager trying to compete with active equity funds being tokenized on the blockchain, so that they can compete with ETFs in terms of fees. Then there is the possibility to accelerate the settlement of the funds. And this is really attractive for money market funds, for example, where we can fasten all the cycle, where basically then instant settlement can be potentially thought. And the challenge for money market fund, however, is that on the asset side, it's not all tokenized yet. So we still need to rely on often D+2 settlement cycle for the assets. So we can see still some challenge, but despite that, there is a lot of opportunity to accelerate the settlement cycle. Then it offers as well the opportunity to simplify the overall process with the custodian, the transfer agent, and this Eleanor might talk about it as well. And finally, it can enable a lot of distribution potential with the opportunity for the asset manager to go in a B2C relationship, offer much more transparency of the holdings to the final clients, and as well the asset manager could have the transparency of who are the clients basically. Then the second aspect I was referring about is actually the tokenization of the investment themselves. So, and this is what Julien explained. Basically, on our side as asset manager, it can offer a lot of investment opportunities. So we can potentially invest in cryptocurrencies, in ICOs, so for initial coin offering, STOs, security token offerings, or other digital assets. For us, at BNP Paribas Asset Management, we prefer to take it step by step and look first at security token. So we believe that there is a lot of opportunity in the alternative space, in the security token space, because it can enable us to source faster and in easier way the assets, generating an attractive yield for the clients while offering diversification opportunity. Over the long run as well, we can anticipate that those assets that have been issued on the primary market on tokenization platform can potentially be traded in the same platform in the secondary market and basically enhance the liquidity profile of those assets. So, and finally, the attractiveness from the security token is that a lot of information can be exchanged, as Julien explained, on top of the security itself, fastening the analysis process of the portfolio managers and the analysts, and reducing the due diligence cost. So then I will let Eleonore explain the opportunity for custodians.
Thank you, Emmanuel. So for asset servicing providers, it's a bit different than the other market participants. The real value and the real revolutions of digital assets really relies into two main factors. The first one is the fact that we will have smart contracts, and the second one is the fact that they are actually managed on a unique ledger. So this means basically that you can actually have a business logic embedded directly in the asset itself. So I'm going to take a concrete example. So for example, corporate action. So with traditional assets, all the market stakeholders, they have to, like such as an asset manager, global custodian, local custodian, CSD, they all have to replicate the information in their unique, individual ledger and IT system. They have to monitor the events, they have to take appropriate action at the appropriate time. So it's really a time-sensitive process where everybody has to really monitor and take the action at the right time. It's risky, it's costly as well. So in the opposition with digital asset and smart contracts are going to be able to automate this process and really improve the communication flow between all the stakeholders. So for example, when the corporate action is triggered by the agent, the smart contract will actually communicate all the entitlement to all the investors. Then the investor will be able to reply to the corporate action, and the smart contract will again communicate all the investor responses to all the stakeholders. So then the custodian, the asset servicing provider, they will be able to do the controls, perform their control and give the green light. And the smart contract will be able to communicate all the settlement to all the stakeholders. So it's in a unique ledger. So really, we see that we can move from a really sequential process with a lot of information replicated on different ledger IT systems into really one process on a unique ledger with optimization of communication. So it can improve like the timing, the cost and quality, and all the asset servicing providers.
All right, thank you for all of that. That's very interesting. It sounds like there's benefits for everybody in the industry. Emmanuel, I have a question for you now. What are the main trends in digital assets? How are institutional investors preparing for the adoption of digital assets? Do we see any acceleration here?
Yes, thank you, Stefan. So we're seeing multiple trends. The first one is an important one for this space is a better clarification from regulators and the fact that licensing is not optional anymore. So I will not spoil what Vlad will say, but what we can say here, it has over the last 2 years, there has been a lot of clarification, distinction between native digital assets like cryptocurrencies or utility token and the security tokens, which is providing opportunity for us as an asset manager because it's much clearer. On the purely cryptocurrencies aspect, there has been as well a lot that has been achieved from regulators. I'm just giving a bit of Asian flavor here since I'm based in Hong Kong. But for example, last year, the SFC, the Hong Kong regulator, was asking for crypto exchange just to register and made the licensing regime optional. This year, just 2 weeks ago, they asked for all the crypto exchange for a compulsory license, basically. So clearly, things won't be optional anymore, and all the regulation will be more and more clarified as time goes. Then the second trend, basically, is that there is a much broader and wider, I would say, ecosystem. The infrastructure is much more ready for us institutional investors to play in that market, and more services are available. For example, we are seeing large banks start catering for digital asset needs, like security services provider. From a data access as well, it's much better. We are seeing data provider that have been packaging digital assets offering, and then more importantly in this space as well, on the compliance front, we have seen a lot of startups developing on-chain analysis solution to enable compliance manager to do AML tracking, for example. And then quite importantly as well, a lot of crypto insurance solutions have been developed. The third trend that we are seeing is that more assets are available. Bitcoin has been rising the last few days, so the market cap of crypto asset has been rising too, now reaching, as we were speaking, more than 450 billion of US dollar. Still nascent compared to large assets, but growing really fast. And the Bitcoin dominance has reduced compared to the former ICO craze we have seen in 2017. I think it's an interesting, the interesting space to watch is the tokenized security space, as I was explaining before. There are at least 50 tokenization platforms in the world, and they are helping small companies or large financial institutions to tokenize the assets. We have seen great projects coming from the World Bank and the Commonwealth Bank of Australia 2 years ago, and then actually a great report to read for the one that want to know a bit more about that, the PwC report on ICO and STO, and they are basically highlighting the key tokenized bond issuance there. So we have seen some from all the large banks in the world, in Asia, US, and Europe, and more recently as well, China Construction Bank have been digitalized a huge bond, a 3 billion bond in the market. The other trend we want to highlight is the fact that institutions are participating much more. Here, there has been some study that have been released focusing on the US and European market. Out of 800 institutional investors, they found that 36 respondents are participating to the digital asset world versus only 22% the previous year. So it's definitely a rise. From the appeal for digital assets as well, the respondents were saying that they have appealing characteristics such as a lack of correlation with other asset classes and high upside potential. 80% of investors find digital assets appealing. And then as well, those institutional investors are highlighting the diversification benefit. 6 out of 10 are highlighting this benefit. The final trend I will highlight is the fact that more mainstream players are coming into the digital asset space. We have seen PayPal enabling all the US users to buy crypto currencies. Large banks in Asia like DBS is looking into launching a crypto exchange and other services. And of course, the central banks are all looking at central bank digital currencies. So when you start seeing those mainstream players looking into the space, I think you may consider looking it for you too.
Okay, thank you, Emmanuel. Interesting. It sounds like the regulators are all over this, and they seem to hold the key to the future. Maybe Vlad, for you, what's the current regulatory outlook for digital assets?
So talking about regulation, digital assets regulation is still relatively in its infancy. We've seen member states around the globe that have been establishing their own crypto asset or digital asset regulatory frameworks. But for now, regulatory certainty has been key in developing these markets. And since we're talking about regulatory certainty, Europe has just issued 2 new proposals that aim to establish a fully comprehensive digital asset regulatory framework by 2024. But this will be interesting to see as it aims to bring the clarifications necessary for the ecosystem to develop itself, and also bring regulators and market players the experience they need to continue experimenting with these forms of tokenization. So far, 2 legislative proposals have been published by the European Commission. The first one is the regulation on markets in crypto assets, called MiCA, which relates to crypto assets which do not qualify as financial instruments under EU financial services rules. So this regulation will replace national existing bespoke regimes and will create common requirements for crypto asset issuers and crypto asset service providers. There's also a whole chapter dedicated to stablecoins and global stablecoins, which is a big issue for regulators and countries around the world, as we've seen the excitement going around the Libra initiative by Facebook. So these 2 proposals, the first one was MiCA, the second one is the pilot regime, which basically creates a European sandbox for DLT market infrastructures that wish to try and settle transactions with security tokens. However, for now, the pilot regime is quite restricted, so only DLT CSDs and DLT MTFs are aimed by this regulation, and the scope of financial instruments is also limited to simple and illiquid financial instruments. So for now, we have MiCA, which deals with everything that is not a financial instrument, every digital asset that does not qualify as financial instrument. And we have the pilot regime, which is kind of restricted, limited, and will allow certain DLT marketing structures to experiment with security tokens. So what we can take from this is we really get that the EU regulation is moving in the right direction, although more cautiously for security tokens, because of course you have some clarifications that remain necessary regarding the applicability of EU financial services rules to these kinds of digital assets, regarding of course liabilities and so on. So many issues that we still may need to uncover as time goes on. Of course, the ecosystem is also developing very rapidly and evolving rapidly. So you constantly have to make sure that regulation is up to date and answers market players' issues and questions. But I think we're moving towards a form of regulation where this will be more and more possible, with maybe less stringent and strict rules and maybe more flexible approach towards regulation. At least we hope for it. So what we can take also from this is that since regulation seems to be moving faster for utility tokens, cryptocurrencies, stablecoins, e-money tokens, and so on, institutional actors may want to revisit their approach towards these forms of tokenizations. For security tokens, as the risks may be higher, regulation will take more time, and the Commission will make sure that every changes to the current regulatory framework will be sound, evidence-based, and does not pose any risks to financial stability. Until then, our goal, and the goal of every market player in this ecosystem, will be to address all the remaining areas of regulatory and legal ambiguity that still need to be addressed. For example, global consistency could be a key concern to enable cross-border transactions. Another significant challenge was finding a way for regulators and central banks to digitize the cash component of the token. So basically to break down the barriers between the on-chain and the off-chain world to stimulate industry pickup. And this is a challenge that's been carefully examined by central banks, and it's still the case for now. And maybe once central banks will have released their own digital currencies, we can expect true legitimacy to come to these digital assets. So in terms of next steps, the Commission, the Parliament, and the Council are now examining the proposals. And we can expect maybe a first entry into force in 2023 for MiCA. But we'll have to wait at least until 2024 to have a fully comprehensive framework in the EU for digital assets. And that's it for regulation.
All right, thank you, Vlad. I think now we have a good background. I'm going to ask the $100 million question now. who do you believe will be the winners and losers in the existing capital markets ecosystem? Maybe Julian, we can start with you.
Sure, Stefan. Well, beyond winners and losers, I think the key question is how will it impact the capital market ecosystem? Interestingly, we usually read that blockchain disintermediate businesses. I don't believe it's the case. Rather, it will create new intermediaries. So you still need trustable organizations in the middle to deal with the value sitting on the blockchain. Huh? It's not because you say it's a Picasso that suddenly it becomes a Picasso on the blockchain, unfortunately. So the important point is, will this be new players, new intermediaries, or how current actors can move in this space and leverage their unique selling proposition to become these upcoming intermediaries? And in my opinion, the winners will be the ones that will be able to leverage their expertise, their go-to-market channels as the brand to create new impactful use cases in the tokenization space. Additionally, blockchain as an engine of trust is very attractive for fragmented ecosystems on market. We talked about the long tail effect. And the winners will likely be the actors able to tackle such fragmentation and to provide new value proposition. In that sense, it's likely a winner takes most play in some cases. The first one to move will aggregate all this fragmentation, and the follower position might be problematic. So in that sense, winners will be companies that would have embraced this technology up front and create new opportunities early on. So they will have the right expertise, against technology, of course, but also regulations, legal aspects led by tokenization and blockchain when time comes. So in my opinion, banks can be very well positioned in this new ecosystem as they have the right business expertise, they have the right channel and the trust from the market. Interestingly, all the recent market and regulatory signals show that it's not a question of if it will happen, but rather a question of when. And back to these winners and losers, I think the main difficulty is to assess when to be active in this domain, when to actively address tokenization versus wait and see. It's important to remember that there are still elements in construction. We've heard, okay, the technology is getting there, but there's still some limitations like the throughput, the volume, the consensus mechanisms, the interoperability. Some regulations as well is being set up, but it's still in construction. And finally, even the new usage and the new products being built are still ongoing. So thinking of it as a real disruption is important, and the ability to understand the mechanics and the technologies as well as the legal and compliance aspect will be key to move fast if need be. As the saying goes, the best way to predict the future is to build it, and tokenization, I think, shall be considered exactly like that, as an opportunity, and a way to reconsider what we've been doing for decades in a new way and better serve the market, and that's where we'll see the winners.
I think that the digitalization at the end should benefit the end clients. With tokenization of mutual funds, we should be able to offer attractive investment solution at an affordable price, And more interestingly, I think it's an opportunity for asset managers well positioned in emerging markets to start promoting micro investment solution as well. On the investment side, I think the winners in the asset management space will be the ones able to connect to the right blockchain ecosystem, potentially promoted by banks, as Julien explained, in order to help source the assets, since the banks are well connected to smaller projects and smaller companies. So it can be really interesting, and yeah, the winning asset manager will be connected to them. And as Julien as well explained, I think it's an opportunity to build a new future, and then the winners will be the ones that are able to embrace that change and to adapt. So Itai, I'll let you give your point of view on this one.
All right. I believe that when you look at the market today, what you see is that the technology is always in front of the big organization, and the big organizations are always before the regulation, right? So it will all be about who is able to bring in the fast followers. So today, most of the market is comprised of early adopters of crypto. And you see a segregation between the crypto players, which all they do is pretty much digital assets, and the traditional financial institutions. And the question is, which of the traditional financial institutions will be able to get into the market, partner in the right way to bring in the mass of the market? The mass of the market is still completely outside of crypto. We're talking about the large asset managers. We're talking about people who are more traditionally looking at this. And they're not the early adopters, but they are looking to find a big organization, a big financial institution with a dominant name who they will trust enough in order to move into the digital asset space. So the big question is, which one of those large, well-trusted brands will be able to bring in the mass of the market?
Yeah, I would add, thank you, Itai, for that. On the custodian and services, asset servicing providers, we have seen forever new changes arise over time, and we always have to adapt. I mean, we have seen the globalization of the investor base. We always see new requirements, new regulation coming in, and we have to adapt. We see also the increase of volume. So for digital assets, it's also look at it as a threat and do nothing and thinking, okay, we are going to be disintermediated, or there will be new actors coming in as fintech or regtech and maybe taking the place of other custodians. But I think that the winners and people who will stay in the competitive landscape, they will actually adapt. They will look at opportunities that it can bring as well, because we could think that investors are going to have maybe now like traditional assets and digital assets, and they will look for combined services that custodian could offer now. Custodian can also provide a global offering with new actors, with regtech and fintech, and provide like a best of breed services to the clients, because the clients and investors, they will have to manage all this complexity, and they will look at these new types of solutions. Also, custodian will be able to actually extend the scope of their services by maybe proposing to insource some middle and back office activities done by the client themselves. So there are a lot of opportunities, and the actors that are going to actually remain in the competitive landscape are really the ones who are going to adapt the changes and embrace it and be ready when the market is as we aim to be.
Okay, thank you, Eleonore. So it sounds like there's going to be a lot of winners here, a lot of winners, but obviously the infrastructure doesn't exist, and yet there are some digital assets that exist today. Itai, maybe, well, what's happening in the market today? How are the assets being held?
Great. So first of all, it is important to understand what we're seeing in terms of assets in the world today. So I think there are three main categories. One is cryptocurrencies. So primarily, obviously, Bitcoin, Ethereum, and then many different blockchains that have their own value. So these are commonly referred to as cryptocurrencies. The second segment is national currencies that are tokenized over a public blockchain. So here, the main category is the stable coins, which is growing very dramatically, even surpassed Bitcoin in terms of trading volume and in external transactions. But also either CBDCs, which are backed by national banks, and also Libra, which you've all heard about through the Libra Foundation, all are trying to tokenize some national currencies. The third segment is, I think what's more relevant to this conversation, is the tokenization of any asset. So not just take a national currency and put it on a blockchain. You can take any asset, it can be a security or it can be a commodity, and tokenize it on a blockchain, and then record all the transactions that are happening through a custodian and get all the benefits of instant settlements, etc. So this is what we're seeing today across all the three categories. The volume of trade is growing very quickly over the past few years. And it's interesting to see the dynamics of the new entrants into the space. One of the major challenges, so you mentioned regulation, but I think the second major challenge in this space is the security and infrastructural challenge. The entire blockchain is a construct that depends on cryptography. So there is this concept of a private key, which effectively is the ability to identify the owner of the asset on the blockchain and govern the identities of the participants over the blockchain. And the private key is a single point of failure. And you have probably heard about many cryptocurrency exchanges and service providers who were hacked or lost for some reason their cryptocurrencies. This is alarming in the sense that anyone who wants to adopt this technology will need to have a sound security solution that will prevent cybersecurity threats as well as insider threats as well as physical damage. And today we're seeing new technologies emerge, but even if you were looking at what's going on in the market 3 years ago, the main ways to secure digital assets were very traditional, very conservative. They were either put them in a vault, literally physical security in order to protect this digital asset, or put it in a location that is connected to the internet and then be prone to cybersecurity threats. So I think these two, this created a trade-off between security and liquidity, and the big benefit of digital assets of being connected is something that will be needed to address by whatever technology solution that comes next.
Okay, interesting. But so how do you see this evolving now? So we've got the landscape here, and maybe what are some of the best practices that are going to be coming out of this that you see coming in the future?
Great. So yeah. So as you know, there are, as I mentioned, there were traditionally two kinds of security solutions for digital assets. One that is, it's like if you have a bar of gold, right? So if you have a bar of gold, you can put it in a bunker, but then you cannot really use it. And every time you want to move that bar of gold, then you are prone to road robbers who can come in and steal that bar of gold. So the analogy here is, how are you able to create a security infrastructure that will be both connected, i.e. can be used very quickly across different market participants on the one hand, but also very secure and not prone to cybersecurity attacks and insiders and physical damage. And what we're seeing is an evolution of the cryptography itself, of the mathematics that fuels the blockchains, and eventually new technologies, very novel cryptography, something that is called multi-party computation, in which effectively you can distribute the ability to govern an asset to several players instead of just one, which is the private key holder. So under these constructs, when you can have joint, think of it as joint custody over an asset, you get better security and you make sure that everyone who needs to approve a transaction are aligned on the decision to make a transaction and to move an asset, and doing that in a very secure way that is backed by very unique cryptography. So you can think of, for example, in the future, where a transaction of a digital asset needs the approval of both the custodian and the actual owner of the asset. Well, think of the asset manager and maybe one of the employees of the asset manager or of the custodian. And together, and only together, they will be able to approve the transaction itself. This increases dramatically the security of the asset on the one hand, but also maintains the novel approach of everything being connected, of everything being very quick and quick to settle. And doing that in a way that is completely software defined, right? So without the need of any hardware, just like today, most of what we're doing is based on software. Also, the governance of the asset will be happening through software and software alone.
Okay, thank you, Itai. Very interesting. So we've come to the end of our pre-recorded session. Welcome back. We are now here for our live question and answer session. So we have a number of questions on the line, but you can continue asking your questions on the question box on your screen. So let's go, let's dive right into the questions. The first question we have from our audience today is, at the moment, crypto assets and classic assets run in parallel. There's no connection to the previous financial world. How can both worlds be brought together? Or will the crypto asset world displace the old financial world?
Oh, maybe I can give it a start, if it's okay, and some other can react. That's a very good question. I think we have to make the distinction between native digital assets and digital assets. So indeed, we have some native digital assets, and even if you look at non-fungible tokens, for instance, they're really created in the digital space, and they live in the digital space. Same for cryptocurrencies. Still, the financial instruments could be tokenized, and we've seen some experiments being done on that. Like you can take some debt bonds, for instance, or equity, which you could put into a token. So this is happening already, and that's really a kind of a transition between those two worlds, and you leverage the digital uniqueness of tokenization for these traditional assets. The next stage in the financial world, and we see it happening, we see some stock exchange looking at native digital assets and how they would deal with that. What would it mean to natively design a bond as a token and then have it run its life on the ledger? And that's really what's now coming in. So I think those two worlds are not really separated, or they're not really running in parallel, but they're heavily connected, and there's some sort of transition, and even the traditional financial world starts to leverage the tokenization.
Yes, I would agree with what Julien just explained, and that's when we always refer to the difference between as well tokenized securities or security tokens. And when we are looking at security tokens, we are seeing a lot of assets being issued on the blockchain at the moment. So it's not necessarily something run in parallel with traditional assets, but just a new way of issuing instruments. So yeah, that's what I would say. Eleonore, do you want to add something?
Yeah, sure. So yeah, from a custodian point of view, we really think that both types of assets are going to live together for a long time. That's why, as a custodian provider services, like we are really going to for our clients to mitigate their risk on their global operating model by giving them access to both types of assets. And even with all the advantages of the blockchains and the crypto assets, we know that they are more targeted at non-listed types of assets for the moment. So there is still a while, and it will take time before we see everything going into the crypto world.
I just wanted to add a small remark, saying that the financial world's construction has developed with the main driver to ensure financial stability and ensure that all risks are taken care of. And since DLT is only in its infancy in a sense, and DLT market infrastructures are being created at EU level, or will be created within the pilot regime, it will still take some time for everything to get into place for everything that is security tokens, to ensure that the same guarantees and safeguards exist for security tokens as for traditional assets. And until this equivalence is there, I don't think we can see it replace the old financial world. It will at least coexist, but replacing is a big step, is looking very forward-looking. Sorry, that's all I wanted to add.
All right, thank you. The next question we have is, where will we see the first impacts of asset tokens?
Maybe I can take this one, Stéphane. If you consider the unique selling point of blockchain, such as being a single source of truth or ability to manage fragmented ecosystems in an efficient and scalable way, some areas are more adapted than others, indeed. So if we take only the information, for instance, that's where you have complex or fragmented ecosystems. That makes a lot of sense because their efficiencies and the use of blockchain could be valuable. But in the case of value, I think we should look at areas which are currently underserved because they're structurally unattractive or not attractive in terms of business. So all the small things, including the illiquid assets, are a good area to look at. So if you look at real estate, and we've seen lots of experimentation happening in the real estate world, but SME debt or even small projects financing, that's where I think we could see the first real impact and the true value of blockchain and tokenization, bringing this what we call long tail effect.
Okay, thank you, Julien. The next question we have, what tokens are being traded now? What types of entities are active in this trading?
So what we've been seeing in the past several years now is a strong growth across the three main segments. One is cryptocurrencies, so blockchain that have their own inherent value, primarily Bitcoin. But also we've been seeing a shift of fiat or national currencies onto the blockchain. It's coined the term of stablecoins. That has also seen a tremendous growth over the past few years. I think it even surpassed the cryptocurrency trading last year in April. And third is tokenized assets. So taking not just the national currency, a dollar, a euro, but also taking a stock, a bond, or other assets and tokenizing them on public chains. This has grown, again, very significantly over the past several years, and we expect this to grow even further with the introduction of decentralized finance and DeFi mechanisms over public chains. The entities are also growing. So in the past, this was mainly driven by retail that were using exchanges or crypto exchanges. But now you see hedge funds, you see endowments, you see different kinds of asset managers, custodians, banks and neobanks, really every financial player, both institutional and retail, getting into the space and with a higher and increased trading volume.
Okay, thank you, Ita. It sounds like there's some inertia out there anyways. Maybe our next question from the audience, thinking about the power of technology, it could be easy to think that it could make it easier to identify asset owners, even more easy than it is today. Is that the case?
I can take this one to start with. Yes, it's totally right. I mean, traceability, but even beyond traceability is transparency. Blockchain brings in this transparency. So you know many things. You know who owns the assets, who's the author or the issuer of the assets. Possibly you can have the rights to it. So this traceability gives a lot of power, and dealing with identity and chain could be a leading edge. And beyond that, for asset managers or asset owner, the transparency leads into a full portfolio exposition. You know exactly what you invested in, and you can get access to the information underlying the investment pretty easily. And in some ways, beyond even the traceability aspects, it could lead to some unique value proposition around solving the asymmetry of information. Sometimes we have asymmetry of information in investments. By using technology with such traceability, you can get the information you need to be more informed and to take better decisions in some ways.
Okay, thank you, Julien. The next question. What will be the challenges for regulators of tomorrow? Sounds like it's for you, Vlad.
Yes, I'll take this one. So from a regulatory point of view, from a regulator's point of view, I think one of the challenges to keep in mind is the increasing complexity of the topics themselves. So you have to build knowledge, you have to build experience. And I think we can see that in the pilot regime initiative that's being led by the Commission. So that's the first thing. The second thing is regulatory uncertainty, as we've talked about it before. It needs to be eliminated in order for projects to develop themselves in a healthy ecosystem. Also, as digital innovation and technology evolves, you have to make sure that the regulation stays up to date and is kind of future-proof, That's one of the objectives also of the Commission and its digital finance strategy. So this is also represented by the pilot regime, which is a more flexible approach to what we used to. Another challenge will be ensuring global consistency, promoting innovation across borders, and of course we will have the problem with the tokenization of the cash leg in transactions with security tokens, as we're still missing this link with the creation of a CBDC by central banks might give more legitimacy to the whole ecosystem and allow it to function more efficiently. And always with innovation, the main challenge for the regulator is to strike also the right balance between new entrants and financial institutions that have already been there, and to have this balance maybe between innovation and financial stability.
Okay, thank you, Vlad. That leads really nicely into the next question coming from the audience, which is a stable coin question. Could we see a major central bank allowing a stable coin based on a central bank currency?
I can take this one, adding a bit of Asian flavor into the webinar. So basically, yes, because the PBOC is already piloting a program on the yuan, and today the yuan is already in few provinces in China. Next year, they will potentially release this stablecoin nationwide. So we'll see a lot of development in the Asian countries. Of course, I think behind this question there is potentially a question on Europe and so on, but what I think is that definitely all the experiments happening in Asia are pushing the European central banks and other central banks to look at it even more seriously. Maybe, I mean, my French colleagues can add a bit of flavor from France.
Yes, yeah, so really it's something that we can expect. There are initiatives at the moment, such as the one led by Banque de France, and it's from a custodian again perspective. It's really one of the remaining barriers to see the demand into crypto assets picking up, into securities token, really. Because today we don't have a real digital currency that is trusted by an authority. Therefore, we cannot manage the cash on the chain. This means that we still have a disconnection between the settlement of securities and the settlement of cash. And besides all the benefits of the blockchain and security tokens, the demand from our side is not picking up in that way. So for us, we really need to have a central bank digital currency that is trusted by the market and our clients.
Okay, thank you. Well, we have another question here, maybe slightly technical. What is the primary difference between MPC and a traditional hardware-based solution?
I'll take this one, obviously. So MPC, or multi-party computation, is a cryptographic scheme that allows a distributed control over a digital asset. And it is based on mathematical protocols. On the other hand, hardware-based solution, or HSMs, hardware security modules, are based on a piece of hardware that ensures that the secret material or the private key cannot be extracted through physical access to the device. I think that the main difference is that MPC is based on a mathematical proof, while hardware is based on an engineered solution. And MPC can protect from, obviously, various attack schemes in hardware as well. And sometimes you see the combination produce an even better good. But in general, it's all about what is your trust model. In MPC, the trust model is math and the distribution of the parties. And in hardware, it's the physical security of where the hardware is located and the engineered solution, and whether or not there might be vulnerabilities in that engineered solution.
Thank you, Itai. So we've come to the end of our webinar. Unfortunately, we don't have any more time for further questions. Thank you very much for having participated in this session. We hope it's been informative. A recording of this session will be available on our website in the next couple days. So do please stay tuned for future webinars in 2021.